morning and welcome to Trading with Larry. Larry Benedict, joined by Eric Shamilov. Good morning, Eric.
Good morning, Uncle Larry. How you doing?
All right, it's a macro Monday. A lot of macro to talk about, actually. There's a lot of stuff other than the S&P going up or Nasdaq going up every single day. There's a lot of macro under the hood that I'm seeing that is just very questionable. And we can run through it. One I know you love is the up move in gold. Not really understanding it, but we'll go through that.
What's there
And
to understand? I mean, dollar down and yield curve up. Buy gold.
all of those things have been here when gold was 400 points lower. So I don't know. The euro going from 114 to 115 is making you buy gold
Yeah, but
up.
hold on. You always say gold doesn't react to anything, and then when it
It
finally
doesn't.
sets up for a traditional
I
factor,
don't think it. I don't think it does react to anything. But
okay.
that's neither here nor there. But
Well, do
let's
you
just
think
go.
gold going up is, we talk about macro. Do you think gold going up is a sign that the market doesn't think the Fed is going to actually raise?
No, because the Fed is going to raise. Okay, so if they're betting on the Fed not raising, I'm betting the Fed is going to raise. Okay, and I think once we get closer to it, we'll get to it. But let's just quickly go through it. Just the different macro things. So we have that. You touched a little bit on the dollar. You used the 2-year yield the last time gold rallied last week. You're using 2-year yield, which really hasn't moved much at all. Okay, and the 10 and 30-year yield has stopped exploding up, but still is trickling up and is close to 470 on the 10-year and 520 on the 30-year. So I don't see that. And then another one of your favorites, oil,
Oh.
is back to $80 a barrel. Probably fair value for what's going on. And since it's a macro day, I really want to touch on, one.
I like that you said fair value because that was really that's the trade that I put on every time it drops to like lower 70s. I just think fair value is
Yeah,
around 80,
but
80.
Eric, it's a fair value just on the news. Like tomorrow, if they say they're signing a peace accord, blah blah blah, then the thing will be 72. So you always have to watch that.
Yep.
Also, what's really upsetting, last week we had Besson come out on Monday or Tuesday of last week, saying a deal is imminent and they're going to open the strait and all this stuff. And I think it's a shill. I think it's a shill for a lot of these big hedge funds that were long. And it's funny, every time the market has a little bit of what we used to call shaken baby, like when, it goes down a little, these hedge funds get annihilated. Like, I don't know, like
Yeah.
they're not hedged up. Like, it's like they're just maxi max long all the time. So, there's a lot of stuff out there. So,
Hedge funds suffer with FOMO as well. I've noticed.
maybe. I mean, I'm not exactly sure what they are suffering with, but I do know that this is just weird, unguarded territory of wildness, and the market continually goes up. Always, no matter what. It doesn't matter if yields go to 5%, they'll somehow still go up. Like something has to give at some point. And the question is, like, we're talking macro today. So is a weak dollar good for the market or bad for the market? Is bond yields going up good for the market or bad for the market? I mean, it should be very bad. We're touching near high yields and nobody cares. Nobody cares about any of this stuff. Nobody cares that all of last week they said they were going to do some type of crazy deal, and it was going to be amazing, and then there was no deal. So I don't really know how to play this other than as a trader or people that are doing this, just sort of go a little bit, skew a little bit to the long side, but go with the general direction. Like, it was interesting. I had a call from a buddy of mine, or not a call, but a text pre open on Sunday night. He's like, "How much do you think we're going to be down?" And I'm like, we're not even going to be down. And we were up. So it's like over the weekend, Iran is dictating the terms of the deal, correct?
Are they? They're trying. They think they can. Um,
They
and
are dictating the terms of the deal. Whether they can or not is a different thing, but they're literally, we said that we were imminently getting a deal last week and we're talking to them. And then Trump's like saying, oh, we're not really talking to them at all. At all. So I don't know what it is. They're sending messages through other countries or whatever. I mean, they're not even talking. And you and I both have discussed this. We killed the supreme God. Okay. If you kill the supreme God, they don't want to do a deal. You know what they have on their side, Eric? They have time. They have time because we're not wrecking them. Trump has decided now he's not going to even bomb them. He's going to use economic tactics. But how are economic tactics going to work if they're getting money funneled to them through China and Russia? How is economics going to work in an oppressed country that the
where
leadership
they
has?
don't care about economics, right? I'd even add maybe economics is on their side with the drone warfare. Ukraine has showed that against Russia. Iran has showed that against the U.S. and Israel. You
Yeah,
make
and
it. These drones
Loom
are cheap. They make it too expensive for the superpower, and the superpower wants to get out. That's the playbook.
and yeah, we have a quick question. Someone says they want me to comment on the yen intervention. I'm very surprised at the yen intervention because it was trading at 163. It got down to 157 low handle, and now it's back to almost 160. So the question is, was this a throwaway that the United States was like, listen, we'll help you out, wink, wink, but we're getting out of our position right away, and you know, we're gonna just be there for you if you need us. Um, the question is, we're going to maybe head back to 162, 161. Is anyone going to be there? And if they're not, that's a big problem, and that's part of the yen carry trade and the unwind and all of this. Things are just to me looking a little bit iffy, and you know, listen again.
Every time they intervene, the market just goes against them.
No, I mean, it's still in their favor. I mean, they came in at 163 and some change, and we're trading at 159. I mean, that's a big yen move, four figures for nowadays. Back in the day, when I was trading it in the 90s into the 2000s, that wasn't a big move at all. Yen would move 30 figures in one day. I mean, it was the Wild West. But central banks got control of the manipulation in that market, and that market doesn't trade like that anymore. It's funny. We always talk about it like when is the SEC or whoever going to get rid of this payment for order flow? Because that's what's wrecking the markets right now and wreaking havoc. And overseas in Europe, they disbanded payment for order flow because they know how illegal it is for someone to pay to see your orders. So, there's a lot of stuff in the forefront right now that is making me leery. But like in today's action, if you look at just across the board, I mean, we should definitely be down a lot, but we're not. We never really go down. It's very strange. Like, would you say the news over the weekend was positive or negative?
I don't think it was anything. Well, what was the news over the weekend?
I don't know, dude. All week we rallied because they said there was going to be an imminent opening of the strait. Okay, and that they were going to
Is that why
negotiate.
you think we were rallying off the lows all week?
Yes, yes. If it wasn't, why did the United States government throw it out there? Why did they have Trump and Besant last week saying they're imminently going to do a deal to open the strait? It's already done. So yes, I do think that definitely had something to do with it. I'm not saying every tick every day, but it certainly had an underlying theme that things were getting better instead of things getting so much worse. I mean, I don't know if you saw, I'm sure you did, what came out of Israel yesterday with Netanyahu. It's the first time in history we basically told the United States that we're not listening to a word you're saying and we're out. So that doesn't set
But
anything.
that was about the Hamas disarmament. But
100%. But so what? It's not a matter of what it was about. It's a matter of a country that's completely aligned with the United States basically saying to Trump, "We are not doing your whatever point. It's always a 10-point deal, a 14-point deal, some kind of deal, 12-point whatever, and we're out. We're not withdrawing." So I don't know how that's not looked at as negative. Okay. Basically, all of what has been done is now unwound. Okay. And you got that amongst other things that are making me very leery of the market moving forward here.
what
Let's just,
what you're talking about with Israel, I think, underscores a more of a global trend where I think there's a reluctance to either a take the U.S. seriously or comply. I think the relationship of the world to the U.S. has drastically changed.
okay. So
And
what I'm
if you
saying,
talk about like a macro, so I talk about two ETFs constantly: BOAT, boat, and DGLO, the deglobalization ETF, founded by my ex professor actually. So yeah, those two I think would play well to this theme of the U.S. maybe taking a little bit of a backseat to their global leadership.
mhm. Okay. Um, I mean, if that, this is what I'm saying. So you're like saying, why would you?
Gold is up 40% this year, by the way.
No, but my question is, you're saying like, why would we be down today? I mean, there's
Well, you and I
clearly
talked about the timing of getting back bearish on the market, and you and I talked about. I don't know if you had that thought or agreed with it, but I thought this week would set up a nice short trade.
but I couldn't listen for you to go through the week. We're going to try to get people through the trading day today, trading with Larry
Well, it's
today.
part of
Is
it. The
going
Nasdaq is
to,
up 10% from the low. Like
I
we got
under,
to be looking for a
Eric,
short.
I get all of that, but, I,
I'm just hoping the market holds up until 9:30 so I could get out of some of my.
well, it's definitely not. We're on the dead low in Nasdaq of the day, including the overnight. So I
Yeah.
don't know. We're not holding up, but literally the Nasdaq, like I've looked at it, the Nasdaq can move 300 points on air. And last week was a prime example. Like, it's just it's pretty wild out there. But let's get back to the macro. You know, we have a product, okay, at the opportunistic trader called Currency Trading Wizard OFX. And we trade currencies in that. And it's setting up to look like a dollar long potentially. I mean, I'm not pressing it. The euro's at 115 and some change. I mean, that's like the highest level it's been at. I just don't understand how none of this stuff, whether it's bond prices or the dollar or oil or even gold, nothing has an effect on the S&P. Nothing.
No.
Eric, nothing.
Yep.
So isn't that a weird time? Like that's never happened in the annals of time. So today,
Really?
it
I mean,
has.
I look at it like you have the stock market with the AI trade. Now you have a trade where people are thinking that there's a broadening out. So, okay, you have the stock market in one lane, which most of that is the AI trade. And then you have all these this macro overhang traveling in another lane, and they're not converging. There was one day of convergence on that Fed meeting day where there was no quarter in the market. You can't just buy something, sell the other, like buy hardware, sell Mag 7 or something like that. There was no rotation to be had. Everything dropped. I think that's a little prelude to what we'll have sometime at the end of this month into September. But they're just traveling in two different lanes. Like the stock market isn't looking at the macro picture at all.
But why? I mean, then how do you trade? What are you looking at?
You just kind
You could
of
look at
diagnose
price.
the situation that whatever the dollar does or whatever rates do probably is not going to have any kind of bearing in the here and now.
Never works. It might work for this afternoon, but it never works over time. I mean, listen,
Over time,
they
yeah.
they just switched the mantra. So like they won't talk about bond yield here until the day we're down, and they'll go, "Holy cow, bond yields at 475." People are freaking out. So that's where we sit. There's an insatiable appetite, as you know, to buy stocks at any cost. So, that always is risky. You know, it's August.
So I got you off your train of thought. What are you doing with the euro?
No, I want to get long the dollar, but I'm just watching it go higher. But in here is a good level. We're going to probably initiate a trade in here with that. Um, you know, I think in our spread trader product, which has been not great, it's a very tough product. You somehow love it, selling iron condors. That's basically, we don't sell iron condors unless we have to, but we sell one side of the spread, and it's been very, very difficult this year. For sure, out of the last 7 years, I believe, of this product, this is the only year that we're down money. It's happened one other time when you first joined me. We were down a lot, and then we went on like a crazy run in the fourth quarter. I'm hoping that happens again, but it's been very, very tough, and these markets, they're just rigged to the buy side, which is fine for now. But I don't think we get out of this year. I see very many similarities to 1987, not any other year, 87. Where, we had all of this over leverage. One thing we did not talk about, and I know it's macro Monday, but I want to talk about the leverage that's being taken by hedge funds and institutions and retail customers and etc. And you look at this guy who blew up, his entity, by using over leverage. But my question is, why are J.P. Morgan and Goldman lending this guy, one of the biggest hedge funds in the world, 4-1 on his product? I mean, that's like a drug dealer giving somebody drugs, and if you sold me drugs and I die, you murdered me. It's the same thing. These firms murdered this guy. Okay. And not only did they murder this guy, they put like fentanyl in his position and told everyone that he was on drugs. And I mean, it's the biggest setup I've ever seen since I've been trading one of, that they basically ran him in. Listen, why didn't they just stay with the leverage? I mean, they were so worried it was going to go negative, but yet as second he sold the trade, it exploded up 30%. So,
Yeah, I feel like if they didn't liquidate him, the market would just keep going down,
well,
right?
not even a full Eric.
Because the bill of confidence for the market, it turns out, was Citadel swooping in, and then they're like, okay, well, Citadel bought it, then everything is okay.
No, I think it's even worse. I think they created the inherent volatility where they took every one of his longs down and every one of his shorts up, knowing his position, that created the whole trade. But overall, overall, they liquidated the guy. But, getting back to my trend of thought, like there is massive leverage in the system right now, all over the place. So if it happened to this guy literally in a 3-day period or less, what happens if we have a sustained sell off, okay, like we had there, and we don't bounce back? or we go down 8% in one day, which is very possible. Okay, very possible. I know you don't believe it could be possible, but it's very possible. Okay, I'm telling you, very possible because the leverage, the inherent leverage out there is spectacular in my book. I mean, it's massive.
Well,
And
when we talk about leverage, my first thought goes to interest rates, which I think helps the leverage situation. So, I mean, the odds of the rate hike for September basically got cut in half over the last couple weeks. We have a CPI report. We had a jobs report on Friday, which, I mean, it came in negative, but there was some seasonality with teachers and the fact that it's summer. There was some of that. You take that out, it's still very low jobs growth. And then you factor in the jobs revisions. We've been averaging like 20,000 jobs created over the last 3 months, which is very low. And now you have Fed hike odds drop to basically half of what they were. So we
okay,
didn't
well,
get
let
a
me
rate
ask you
hike in
this. Let me
July.
ask you
Everybody
this.
thought we would.
Right.
We didn't get the rate hike in July. Up until the meeting, the market was actually thinking we might get one. Even Citadel came out and said that.
No, Citadel came out and said that because they were wrecking the guy. Okay, it was
Okay, yeah,
part of the wreck.
probably,
When is
probably.
Citadel making a market call externally? Like they're
Yeah,
a
I was
private
surprised.
equity.
I was like, why are they saying this?
I
And
said that to you. I
yeah,
said they've never made a market call. They were wrecking this guy. Okay, but that was
amazing.
yeah, but amazing. You don't think that that's amazing? When has you ever seen Citadel make a market call? I mean, never in the history of the hedge fund. It's the
That's
strangest
so
thing.
classic Wall Street. Like that's something that
But let's stop for a second on this Fed odds thing. Okay, you're saying the odds right now are the same as what they were last month at the right before the Fed meeting. It makes no sense. The Fed is going to raise rates at the next meeting. Okay, they're going to do it. If listen, the problem that he has, to be completely frank, he wanted to raise at this meeting. They were at the table screaming and yelling to raise. You guys are missing the boat. We need to stop the speculation in the US market. We gotta tame inflation. We have a mandate. We got to shrink the balance sheet. And he's sitting there screaming, and they got Powell and his knuckleheads that are never going to move because they're, what was his nickname? Too slow Powell or whatever.
too
He'll
late
never
Powell.
move. Right. He'll never move. So he's got a faction of guys that won't move. So that's where we sit. Does Kevin Warsh want to raise rates? 100%. 100%. He sees massive speculation in the market. He sees inflation running too hot. He wants a true 2% inflation, which I don't know how they're going to get, but he needs to slow things down for
Oh
sure.
yeah, he was very adamant about that 2%.
But I'm saying he can't get it done because it's a committee vote and the committee is not ready to make that move. So we'll see at the next meeting whether they are. But really looking at macro thematic stuff, stuff, if you put like a blindfold on yourself, okay, and you just look, and I just said to you, hey, rates on the 10-year are 465. Um, you know, oil is at $80 a barrel, gold is at 4,300 plus. The dollar is getting toasted. You would be like, holy cow, these are all things that would make me a little nervous. And the market is the farthest thing from nervous. It is like, when it was nervous a week and a half ago,
Yeah,
but it didn't even know why it was nervous. It was, why are you laughing? It's the truth.
yeah.
It didn't even know why. It was because one guy had a leveraged position that got everybody. Listen, we sat on this show and we're like, I don't understand why Oracle's up $20 and this one's down $20 and this stock is doing this. It's all because they ran through a computer model, okay, positions that these guys had, and they just basically sold the longs, and bought the shorts,
They know how to push the right buttons. Is that what you're saying?
Yeah. And then basically they got the wink wink call from from the clearing firms and sold the trades. But my question, which is a better question, why didn't they bid that trade to the open market? They really didn't even give that trade to the open market. They didn't call Susquehanna. They didn't call. Jane couldn't really buy it because they own the positions because they're a principal in the firm. They invested in the firm. So, it's a very interesting scenario. And we're Monday morning, and it's the same thing. They want to buy him again, even when they took him down a minute ago. They take him right back. I don't know what. I don't understand what's going on.
I'm not
Okay.
really looking. Are you like last week? I was looking for longs. I'm not looking for longs this week, as you know. But we got 5 minutes. What do you think today in terms of the straddle? Do you like it? You don't like it?
I have no idea. I mean, listen, I think that we should go down today. But I don't know what's going to happen. I mean, we're sitting, like, I look at the S&P futures and it's mind blowing. 77, 78, or whatever. I mean, 77. I think on this down move we got to like 60. It's a 73. I mean, it's straight up in a massive line. You know. So
So here's what I'm looking at for. I think the Nasdaq is a different story. Like I think you got to look at these two markets completely differently. In terms of the S&P, here's the ES. I think we're set up still. Like we were consolidating the last couple of trading days after a huge up move expected. But now you have a setup where you have your short-term moving averages, these green lines. You have the 5 and 8 day. You have your point of control, all within the vicinity of price. I think it could be a very noisy kind of technical day where the S&P tries to find its footing technically and start bouncing up off of all of
time,
these.
time. Okay, we got 3 minutes. What are you saying? We had the whole trade. We consolidated for 2 days and exploded up. I don't know where you were on freaking Friday.
On Friday. I was
What
there.
do you mean we consolidated? We consolidated for 2 days.
Yes, Wednesday. Yes,
Okay?
yes. Wednesday,
It was
Thursday, we
beyond- wait a
consolidated.
second.
Yes, you're right.
It was
Wednesday, Thursday,
beyond
we
obvious,
consolidated.
and the market rallied 50 on Friday.
Yes, Friday we exploded. But here, what I'm trying to say is you have a lot of price magnets all around the current level, which to me tells me that the market is going to try to find its footing all day, and it's going to be a little bit noisy in the S&P. The Nasdaq might be a
Okay,
pure
so
trade.
basically what you're saying is you want to do an iron condor, whatever. I mean, it's whatever. I think the market could sell off decently. Okay.
Today?
I think the external news in the market is very, very negative. I'm
Yeah,
not
you got to
saying
look
it's
for the
going to
short.
happen.
I think this week you're right. I think you got to look
I
for the short.
can't look at this week, and neither can you. We got to get through today and then maybe tomorrow. How are you looking at this week? You got inflation numbers all week that are going to be massive. Okay, that's one. Okay, you got external noise, fake news from the White House that they're doing a deal every single week for the last 4 months. We're doing a deal. Okay, you have that overhanging the market. You have very negative thematic macro here that, to me, if you overlaid it, it looks negative. Okay. So you have all these things, but we're just trying to get through, you know, we're just trying to get through today.
So somebody asked the question, what am I looking at? In terms of the S&P, I'm looking for ping-ponging all day, so that's one. In terms of stocks, look, SpaceX is going to open up where, like 135 or 136. Oracle is going to open up around 147. These are positions I think I'm going to have to start thinking about cutting this week. So I'm looking at those, and I just, I'm hoping gold, just regardless of what rates are doing here or whatever. If I just don't want a situation where the market goes down and gold starts correlating down with it. So got to look at those things. But I'm looking at basically paring back my entire book today.
Okay. All right. Well, listen, One last thing, we talked a little bit about it. We're cut into a half hour, so it's hard to really get to almost everything, but we're trying. CPI and PPI are this week, okay?
Wednesday,
Um,
Thursday.
right. So, I mean, literally, if one of those numbers comes in hot, okay, you know, then it could be very, very interesting. And really, we'll touch more on that tomorrow. I listen. Remember to like and subscribe to Trading with Larry on YouTube. And we got a wrap. I'm getting like the cut sign from everybody. So we're cutting, and I wish everybody a great trading day today. Eric says Iron Condor. I'm a little nervous of the downside. So
I didn't say Iron Condor.
all right. Well,
I said
listen,
we're
we
gonna
wish
ping pong.
everybody, we wish that is an iron condor if we're going to ping pong.
Okay.
I'll
All
talk to
right.
you.
All right.
Peace. Enjoy, everyone.